The stock exchange is a great way for you to build wealth. However, many of us are not being trained in finances to actually know how to use the stock market, and we end up buying random shares and losing a lot of money. In this video, I'm going to show you how you can start building wealth with the stock exchange. Hi, my name is Yolanda and welcome to Financially Fabulous Females. It is my goal on this platform to give you easy, actionable tips, content and strategies that you can use to manage your money well, live abundantly, and build generational wealth. So today we're talking about the stock market and how we can be making money on the stock market. And over the years, the ease and barrier to entry into trading shares on the Johannesburg Stock Exchange have become lower. It's a lot easier for anybody with a simple device to buy shares on the Johannesburg Stock Exchange. However, we're not skilled enough to know what to buy, when to buy it, when to sell it, and thereby we are losing a lot of money. But I'm going to uncrack this for you today in this video. But let's first try to understand what is the stock market. But before I go on, I want you to subscribe to this channel if you haven't done so already. That way, whenever I put out a new video, you will be notified. And also like this video, because what it does is it triggers the YouTube algorithm, and other folks just like you that are searching for the similar kind of content will be able to reach it. So the stock exchange is basically a place where companies are listed, and companies list on the stock exchange because they want to start raising finances to expand for research and development. And that gives people like you and I an opportunity to own a small fraction of those shares. Okay, so while previously the company might be held by one person or maybe a small group of people, when they become listed on the Johannesburg Stock Exchange, there can be hundreds of owners in this one company that are buying shares, small fractions of these companies, on the Johannesburg Stock Exchange. So sometimes one company that's listed on the exchange has millions and millions of shares. And depending on how much you invest in buying a share, you can own anywhere from a fraction to 1 to 10 to 100 to thousands over time. All right, so that's one way you can buy into a company. Whereas a private company like my business, Financially Fabulous Females, if you wanted to buy a piece of my business, you'd give me a call or send me an email and ask me if I could sell you my business, and I would be like, no, I'm not selling. However, on the stock exchange, where the big established companies are, you have an opportunity to own a share in that company. A lot of the times when we are listening to the news, we find the news reporter go that the stock market is up, the stock market is down. What does that actually mean? Well, it basically means if the stock market is down, is the stocks aren't performing well. So when it comes to the Johannesburg Stock Exchange, there's an index called the JSE FTSE All-Z Index. So in that index, an index is just basically a group of shares. So in that index is 99% of all of the companies that are listed on the Johannesburg Stock Exchange. So when the news reporter says the JSE is down, it means the performance, the average performance of the companies listed in the JSE have been lower than expected. So that index basically gives us a rough representation of the Johannesburg Stock Exchange and an even rougher representation of the economy of the country. And there's different kinds of indexes. So we have the All-Z, which basically is a broad representation of the Johannesburg Stock Exchange. We also have the Top 40, which is the top 40 biggest companies listed on the JSE. So that's an index you can invest in. So if you don't know what to invest in, are you picking individual shares? You have a basket of shares that you can invest in. We also have international indexes like the Dow Jones. And if you're watching international news, it's an indicator that's brought up even in the regular news, whether the Dow Jones is performing well or not. Now, the Dow Jones is a basket of shares, again, of 30 of the biggest stocks in the New York Stock Exchange and the NASDAQ Stock Exchange. Now, New York has two stock exchanges, the NASDAQ and the New York Stock Exchange. So the Dow Jones is an average of the top 30 companies in a combination of both those exchanges. Then we have the Hang Seng, Hong Kong-based index that gives us an average of the companies listed on the Hong Kong index. Then we have the FTSE 100. This is tracking the top 100 companies listed on the London Stock Exchange. Then you have the Nikkei, based in Tokyo on the Tokyo Stock Exchange, which is tracking the top 225 companies listed on the Tokyo Stock Exchange. All of these indexes give you a broad representation on how the various companies are performing in that country. And in the back of your head, you're thinking it's a reflection of the performance, economic performance of that country as well. So you as an investor wanting to invest in the stock exchange, you can choose to invest in an index, which is a broad representation of various segments, or you can choose to invest in individual shares. For example, Vodacom. You as a South African have an opportunity to go into the stock exchange, virtually of course, via a broker, purchase however much of the Vodacom shares that you can afford and make some money, basically. Or you also have the option of investing in the ALSI, which is the collection of all of the shares. Or you can invest in the top 40, which is a collection of the top 40 best performing companies on the JSE. You have complete control over what you invest in on the Johannesburg Stock Exchange. You just need to know where you're investing, why you're investing, and how you're going to make money from this investment. But before you go investing, you need to understand asset classes, and I did do a video about this, and you can watch that video over here. So the better you understand asset classes, the risk, the reward, the volatility that's involved in each asset class, you would have a clear indication of what you should be investing in. So here, during this entire video so far, we've been speaking about shares, and shares is an equity investment, meaning it's very high risk. With that risk comes a lot of volatility. So how do you make money? Well, you invest into companies that make money. And as those companies make money, you make money as well. So there's basically two ways that can happen. One, through appreciation, and two is through dividends. So if you bought shares into a company like Sogosan last year sometime when lockdown was at its most stringent, Sogosan is into gaming and hospitality. Demand was low because of lockdown. A lot of people didn't want to go out or couldn't go out. The casinos were closed because of the restrictions. So all these hotel rooms, all these seats at the casinos could not be filled because there was no demand, and the value of Sogosan shares fell. But if you're a long-term investor, you know that everything is up and down. It goes in a cycle. So if you're like me, I bought shares during this time when shares were around 4 and some change. So I was aware, as everybody was, that eventually lockdown would lift. So I bought these shares at a very, very low amount, at around 4 and some change. So as things progressed, as the government slowly reduced our regulations and the various levels of lockdown, more people were going out, more people were traveling. We'll see in the coming summer months, more people will travel, and as the economy opens up, businesses open up, business travel will peak. A lot of people will be getting money as work start back up. They want to go and gamble a little bit, and the shares of Sogosan would increase. And currently, shares are trading at around 13, 14 Rand or so. So if you bought it for Rand, obviously, at this point, you're sitting at a greater than 100% return. So that is how appreciation works. Where you buy a share with a low value for 2 Rand, you wait for the share to appreciate and sell at 4 Rand. Now, it's a lot more complicated than that. You got to continuously be doing your research. You got to know the industry that you're in, the players that are in there, and so many other socio-economic dynamics that impact the price of the share and that company performance. So the second way is through dividends. So when a company is doing well, they pay their investor dividends. So investors invest in the company takes that money, they do research, they do development, they expand, they do new products, new innovations, new hotels, new something in order to grow their business. And when that happens and business grows, appreciation happens, and they pay dividends to the shareholders as a thank you for investing and also to attract more investors. So the more money they get, the more they can expand. So you as an investor, you need to know whether you're investing for appreciation or for dividends, so growth or for income. What's your strategy for both? Are you doing a combination of both? And you can learn a lot about this inside Wealth Insiders. If you're a client, you have access to my private education platform where you can learn these kind of strategies. I did a whole series on technical and fundamental analysis that will help you in making your investment decisions and developing investment strategies. And also, if you're a Wealth Insider, I'm your advisor, so we will chat about these kind of strategies in far greater detail. So how do you start investing in shares? Well, it's a lot easier right now. Everything is online. Most of the banks offer share trading platforms. There's also apps that you can use. Do your research, make sure you invest with somebody, a broker, an online platform that is registered with the FSCA. As a South African, never invest with anybody that's not registered with the FSCA. Okay, be safe. When anybody is registered with the FSCA, you know that they go through a rigorous amount of regulation. It's awful at times. I have to keep up with that regulation as a financial advisor. It's awful, but it's for the client's protection. So there's two ways that you can invest at this point when you find your share trading platform. Is one, actively, where you go and pick the shares, you do the research, technical analysis, fundamental analysis, you're tracking everything daily and you're in the thick of things. And for some people that's okay, but for others that's not. They want the easy pick, they want the professionals to do it, and that's where somebody like me comes in, whereas I don't recommend on share trading, but I do recommend on funds that invest in shares. All right, things like unit trusts and ETFs have a combination of the various kinds of shares. It can be thematic, it can be by region. For example, an ETF based on the United States or Japan or the world performance. So those kind of investments is something that I specialize in, where I will help my clients select those kind of investments based on their level of risk. One of the nice things about that is the asset manager is doing all the work. The professionals who studied this, who are in the thick of things, they know the markets, they're in this every single day. It's what they get paid to do. They're professional, right? So pass it off to the asset manager. He charges you a small fee for his services and using his platform, and you grow your wealth that way. All right, so don't stress too much about how do you pick the right stock, but pick a basket of things, whatever interests you. You can be thematic by region. The options are endless. So as a wealth advisor, we'll look at tax efficient investments. I'll advise you based on the amount of risk appetite you have. I'll recommend a portfolio like this one. So this is a sort of investment that I could set up for you. Now, know that the content of this video is not financial advice. It's for educational purposes only. Speak to your financial advisor if you are looking for a similar sort of investment. If you don't have an advisor, please reach out. I'll be happy to help you. The link is in the comments below. So I would construct a similar sort of portfolio like this, where a significant amount is coming in fixed income, property, investments into property where you're getting rental income, high dividend funds where the fund is in companies that pay a lot of dividends, also a significant amount in local shares, and also international shares as well, because equity holding is where you make your money. I will also identify tax efficient wrappers for you to invest in. So based on your financial situation, how much you earn, what your family structure is like, what dependents you have, what your current level of wealth is, what your risk appetite is, what your current tax rate is, I take all of that into consideration in advising you on tax efficient solutions with the exact same fund on the board. So we can have multiple investments with different wrappers with the exact same portfolio representation. We'll also execute that plan for you. We will set up the investment and make those purchases for you. And we'll also do regular reviews where we're checking the performance. Is the performance in line with your goals? Do we need to change something? Do we need more exposure in offshore? Has your risk level changed? Has your life stage changed? And we'll make those changes accordingly. If you're ready to make these kind of indirect investments into the Johannesburg Stock Exchange, please reach out. I'll be happy to assist. Also join me for part 2 in this video. We're going to be expanding further on how you can be building wealth on the stock exchange.